Here's the money shot, kids. This is the chart that you need to just sit back, chill the out. I'm just going to let you marvel in that beauty. You see it? Liquidity is everything, kids. Bitcoin is exactly following total liquidity. And it says we keep going into the end of the year.
In recent days, cryptocurrency investors and other market participants have experienced a roller coaster of emotions. Earlier this week, Bitcoin, the world's largest cryptocurrency by market cap, showed signs of resilience, briefly breaking the crucial $69,000 resistance level to reach a multi-month peak of $69,500 per coin. This sparked a wave of enthusiasm across the market, with prominent investors and traders celebrating the milestone on social media. The popular anonymous Bitcoin analyst, Plan B, quickly asserted that Bitcoin was following his stock-to-flow model precisely, with over 7,000 crypto Twitter users affirming his analysis by liking the post. However, this excitement shifted rapidly when Bitcoin's price plummeted by nearly $3,000 within hours of reaching the $69,500 level. Critics, along with prominent traders, began forecasting a drop below $50,000, warning that this could extinguish any remaining bullish outlook for this cycle. But as Bitcoin started to climb again, the market narrative swiftly changed, with many confident predictions of Bitcoin reaching $100,000 before year's end. For Raoul Pal, founder and CEO of Real Vision and global macro investor, times like these are a reminder to zoom out and consider the broader context. Pal emphasizes the importance of observing Bitcoin's performance, along with other cryptocurrencies, in previous periods of liquidity expansion influenced by central bank actions. In his latest Drinks with Raoul Pal episode, he presents several key charts, including a global liquidity chart, to support his belief that the cryptocurrency market is on the cusp of significant growth. The chart shows a strong correlation with Bitcoin's price movements, leading markets by about 10 weeks. If central banks continue easing measures, Pal is confident that this could soon propel crypto assets to unprecedented new heights. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
Let's talk about drama. I'm going to share a screen, Nicky boy. I'm going to go with this one. So here's my trading view of drama queens. Drama queens are, oh, the market's going up, the market's going up, the market. This is Bitcoin, by the way. Oh my God, it's getting near 70,000 on Sunday night. Really? Who do you think is buying on a Sunday night? It's you lot at home drinking your Bud Lights. Stop doing that. Sundays, there's no volume on a Sunday. Guess what? Market opens, it pukes again. And then it's, oh my God, it's going to zero. And there's a bunch of Twitter posts saying it's going to go to 48,000. Does it go lower? Maybe. But really, you guys have got to stop using hourly charts. What you actually need to do is very simply zoom out. Zoom the out. Look at that. Does that look like a terrible market? No, just consolidation. Does this recent drama move look like drama? No, it's barely touched the high from a few weeks ago. There's nothing going on, kids. Stop thinking the world is changing, but the world will change soon. The other thing to zoom out on, if I find the right chart, this is a lovely chart for all of you looking for altcoin season or the yellow fruit zone. What we have here is total market cap excluding the top 10. Now, what's so lovely about this is it's just beautiful how this chart works. Consolidation, election year, boom. Consolidation, election year, boom. Consolidation, election year, fruit. Now, when I zoom in, we've got some potentially inverted head and shoulders. Could we come back down and fell the head and shoulders and come back? Sure, we can. I don't really care. But I'll show you why I think it's yellow fruit season. Most of the charts are similar. Actually, Solana's been different. It's actually been, sorry, there's my fake DMARC indicators on here, so it's a little bit messier. But Solana has been trying to break higher. But again, it's not really going to make much progress until the big daddy, Bitcoin, does it. But again, if you look at the hourly chart, here's Sui on an hourly chart. It's like, oh my God, the horror. It just feels awful. And really, it's barely doing anything, really. I was just this. If I go, where's the? Sorry, I've got something over my screen here. If I go to the daily SWE chart, we had this. That's it. That's all of the price action. Literally, guys, calm down, calm down. Everything is fine. So I've been using more Wyckoff reaccumulation patterns. I never used to use them. I didn't really know about them, but they've really worked in crypto. I use this Wyckoff reaccumulation pattern. I used it for Bitcoin recently as well, and this continues to play out. I thought that Bitcoin had reached it here when we reached the point at the bottom, and then it's been basically following this pattern. And Marty's been updating every day. Does it follow it? Will it follow exactly? I don't know. But generally, around here, soon we should get back up to start testing the 70,000 and above, that supply zone, and eventually break as we start heading to the election. The standardized Wyckoff pattern is here. I think this is the highest probability outcome of what we're seeing. I know there are other people calling for lows, other people screaming straight up. This feels like it's probably the right thing.
The Wyckoff accumulation phase is a foundational concept in technical analysis, rooted in market cycle theory developed by early 20th century pioneer Richard Wyckoff. Wyckoff divided the market cycle into 4 key stages: accumulation, markup, distribution, and markdown. The accumulation phase happens when smart money or large institutional investors start buying assets at lower prices while avoiding public attention. Their goal is to build positions quietly, maintaining price stability. As demand grows, prices begin to form higher lows, signaling strength and price consolidation within a trading range. Throughout the year, major institutional players have been accumulating Bitcoin, particularly through spot Bitcoin ETFs issued by firms like BlackRock. Companies such as MicroStrategy, Metaplan, and Marathon Digital Holdings have also been buying Bitcoin to strengthen their balance sheets against fiat currency devaluation. Crypto analyst and commentator Marty Party has been tracking this accumulation, splitting it into 5 phases labeled A through E. Currently, we are in Phase D, right on the cusp of the final phase when the anticipated price surge is expected to start. According to Marty Party, this final phase should unfold as the U.S. presidential elections approach in early November. Once accumulation is complete, the markup phase begins, with prices breaking out of the trading range as demand drives prices higher. This stage, which Raoul Pal dubs the yellow fruit phase or banana zone, is often the most thrilling part of a crypto bull market. Now, let's dive back into Pal's latest video.
Firstly, Julian's putting this chart up of the Bitcoin halving versus previous ones. That's from the halving date. Underperforming now. It's so normal. Everything going on is exactly what it should be doing. We should be getting pretty close to the acceleration phase. The wiggles are different. The pattern is the same, right? Next chart. This is the GMI total liquidity index. That's private and public sector liquidity. You can see it does these wedge patterns. Remember that alt season chart and the wedge patterns? Same pattern, by the way, kids. Oh, it's liquidity. Yeah, the Everything Code told you that. I told you all of this stuff. And every time it happens, every time it breaks out, which it's done, the market breaks out. So exactly the right timing. Everything looks good. This, I think, is the fucking money shot. We produce charts that everybody else in the world copies. Honestly, a global macro investor and in Real Vision Pro Macro, we do more macro crypto research and more in-depth macro crypto research than anybody else in the world. We have definitely changed the landscape of how people think about this stuff. Here's the money shot, kids. This is the chart that you need to just sit back, chill the fuck out. I'm just going to let you marvel in that beauty. You see it? Liquidity is everything, kids. Bitcoin is exactly following total liquidity. And it says we keep going into the end of the year. Could be something to do with the yellow fruit. I don't know. Who's to say that? We don't mention it. We don't talk about it. We summon it by wearing it. We'll come on to that in a minute. Okay, so that's that. Julian showing the same chart that I showed earlier is like, chill the fuck out, people. This thing is ripe. Weekly Bollinger Bands, about as tight as ever been. Every time that happens, yellow fruit tend to occur. They tend to ripen pretty fast. I'm flipping through charts. The chart that we did have in the past that is not working perfectly is like ETH this time versus last time. The Bitcoin version is actually better. The ETH version, yeah, ETH is trading like a piece of shit. I think it's just lost its narrative. I actually think they've overbuilt blockchain capacity for the demands of the chain via the layer twos. Overbuilding blockchain capacity, I think, was a calculated move in terms of a longer term future for the chain. I actually am not a long-term negative over it. I just think, yeah, they've got excess capacity right now for the market. ETH is the big daddy of smart contract platforms. I mean, there's still all the talents, all the developer talent, applications, the finance sector will build on it. It's all still there for ETH. The story's still there, but I think they've built a bit of excess capacity as they've scaled it using Vitalik's scale model. And we'll find out whether it was right or wrong to do that. I actually think it might work. I think it might pay off, that by doing what they did today means that it's a multi-trillion-dollar blockchain in the future. The other one's a killer chart, is ETH today versus Bitcoin back in the previous cycles. It's just like, it's following it so beautifully. It kind of looks like it's in catch-up mode to come. Bitcoin ETH, generally directionally right? There's nothing really you want to concern yourself over. Presidential election years, nobody really cares who gets elected because the market goes up. Now, I think a Trump victory probably may extend the cycle in terms of magnitude.
Pal's key approach to the markets is simple. Avoid stressing over short-term fluctuations, zoom out to focus on the big picture, and most importantly, don't risk losing your assets before the real action begins. He remains optimistic, dismissing concerns of an impending recession or economic downturn that could threaten the bull market. In a recent post on X, he shared his perspective concisely with 3 important charts and 3 statements: the anxieties of crypto Twitter, the real underlying trends, and the broader market outlook. What are your thoughts on Pal's big liquidity picture thesis and its potential impact on the cryptocurrency market? Share your views in the comments below. For more Daily Dose Crypto News, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.